All right. Getting right into it.
Scott's not lying. The lights are bright.
They are, dude. They are. Getting right into it back to back. So like I was saying, I've known Justin for a long time. We played a little bit of football together. I got to see his work ethic there. I was always super, super impressed with that. I'm buddies with a lot of people that Justin knew from high school. They had told me, hey, he's getting into real estate. I was doing things in real estate, and we were kind of growing. And before you know it, the guy's got 2,100 units and just taking off from there. So I guess, what I wanted to go through with you today was just like, let's start at the beginning. Like, who is Justin Spaulding? And then we can get into business, like, after that. How are you wired, man?
I mean, I sports really set that foundation for me where, being the athlete, what I realized is that you got to work so hard to be great and excel in sports, and I was an All-American and all that stuff, and that was really that foundation, and it was in college when I realized I wanted to be, getting into real estate and all that stuff, and so I really realized, man, if I can just roll over the work ethic, the dedication, the overcoming the blood, sweat, tears, all that stuff, and if I can use sports not as just the sole highlight of my life, but as that springboard to, push me forward, I knew that I could do great things, and, it's always sad when you see an athlete kind of fail or struggle after athletics, and we got a handful of NFL guys that actually invest with us and stuff, and that's what I'm always telling them. I'm like, guys, you need to keep the energy that you have, you need to keep this work ethic you have, you need to keep that hunger so that you can find, and again, some of them don't necessarily need the money. Now, obviously, you hear about all the issues that athletes have sometimes after pro sports and money and all that stuff, but, so some of them might not need the money or, whatever, but you still need something to be able to go after, right? Or else you really lose yourself. And so, I really try to work with athletes and really explain, like, look, you can do what I'm doing. And maybe it doesn't have to be in real estate. Maybe it doesn't have to be in business. But that work ethic, that fire, find that next thing for you to go after so you have, you have a purpose to wake up every single morning and go do something instead of just losing that and letting that die.
I love it. The competitive juices, they never go away, right?
Never.
So, and I was similar, right, where once I was done playing college football, I'm like, what am I going to do? And I got into sales, and I started reading everything I could about sales. And I've heard you talk about this when you were in college, just reading the different books that you were reading, and how, like, let's take us back to, like, when you were still playing ball and figuring out what you want to do. What books were you reading? What were you thinking about? Like, how did you get going?
So the first memory I have of real estate is we went to New York City my sophomore year of high school. I just remember looking up, which I think every freaking tourist does. You look up, you almost run into people just looking up at the big buildings. But I remember being, infatuated with that. And then the next big one for me was when we were in Chicago. So it was coming off that first year of football at UW Whitewater there, and we were in Chicago for spring break with my family. And I remember we turned around the corner, and Trump Tower was either going up or just about finished, whatever. And that moment, I ended up going into a bookstore across the street on Michigan Avenue and picked up Rich Dad, Poor Dad, picked up Trump, Art of the Deal, Trump, Think Like a Champion, and two other books. And I had one of them read by the time we drove, home. And I was, from that moment, like, I was hooked from that moment my sophomore year in college. And I was reading with the intent, though, of, a lot of people, Scott did a great job of talking. I always talk about getting into the rooms, too, and I have my own mastermind I do and 6-month accelerator and stuff like that. And I've paid $90,000 to get into a room before. People are like, why would you pay $90,000 to get in a room? Well, it was a 4-day event, and there was $1 trillion represented there. I mean, why would I not for that opportunity, right? So I always want to learn and get into rooms and read books with a mindset of I'm going to go implement this, not just, I don't want to just be that forever student that just keeps learning and learning and learning and never actually going out and implementing and pulling the trigger. So that's something that I'd recommend for all you guys who haven't actually started yet. Find that one person, that two people to follow that aren't totally contradictory, and follow what they're saying and go out and do it and start implementing it. And your life is going to be completely different 2 years from now, 4 years from now, versus if you keep going to these things and then don't do anything. So you did the first step, you showed up, right? And you probably always show up to events, but now make sure you're taking the action and implementing, because I never wanted to just keep learning and not do anything with it, right?
So many people that do that, right? Just learn, and they know so much, but you really don't know it until you actually get some hands-on experience. Till every Mike Tyson said it, right? Everybody has a plan until they get punched in the mouth or punched in the face, right?
And you're gonna get punched in the mouth sometimes, but that's all right.
Amen.
You just keep rolling. It's a game. You're meant to get punched in the mouth every now and then, right? There's very little. If to me, it's like when I'm making decisions every single day, I feel like there's very little. I make decisions really, really fast because I feel like there's a very few decisions I could make that are completely gonna just destruct my business, right? Very few. And so many people put so much pressure on each and every single decision they make. They don't make a decision for 4 weeks. Well, I've made more decisions, from 6 a.m. to 10 a.m. on a Monday morning than most people make in like 6 months. So now I do that every single day. Now I'm 2 times ahead of you. Now I'm 4x ahead of you. Now I'm 10x ahead of the next person because of the amount of I can make 6 decisions and they're the wrong decisions, and I can ultimately pivot and make the 7th decision, which happens to be the right decision, before a lot of people are making the first decision on what to do because they're still going back and forth of what to do. I'm like, make the decision. The worst thing that's going to happen is you just got to pivot.
I'm noticing a trend here in quick decision making. Even if it doesn't go right, make the decision and deal with it. What happens afterwards?
Because there's very few things that are actually going to completely just blow up your business. There's very few.
Yeah.
Are they out there? Yeah, they're out there, right? But not as many. People think that the whole thing is just one bomb waiting to go off and you're done if you make one wrong decision, and it's just not the case.
So let's go back to you're in college, you're reading these books, heading back from Chicago, just amped, and then how and when did you I know the story, but for everybody out there, when did you buy your first deal? When did you put it into action?
So when I was reading the books, I knew I had some time. I was playing. Basically, I started skipping a fair amount of class. I would read my own books. I read like 100 different books through college. Bought them on Amazon, right? So buying used books, they were costing like $3. I'm like, holy shit! I'm getting for a total of $800 to $1,200 on all the books that I bought off Amazon. The education has been invaluable compared to I was like, $35,000 in debt when I graduated school, right? So, but as I started reading those books, what I would do is I would then go and start implementing and I'd go look at the duplex that was listed for sale, because I'd transferred to the University of Dubuque by then. So I'd go all around Dubuque and just show up. I didn't care if it was a single family, an industrial, an office building, a duplex, a 64 unit, a 200 unit. I'd just show up and look. If it was for sale, I wanted to be in the game and learn. And I'd basically get those income statements, the offering memorandums and all that stuff, and I'd basically look at it and say, okay, well, the first thing I'd do is man, why are they spending so much on trash? I know I can probably get a bid and find something that's more reasonable. Why are they spending? Why is this expense there? Or why is the rent only $400 a month or $600 a month? Back in 2008, that's how it was and stuff. And and I'm like, man, when you compare it to somewhere else, it might be $850. I'm like, you can raise the rent. Why not? Yeah, you might have to fix up a kitchen. So I would just kind of do that and envision myself buying that deal. And I'd kind of put myself through that exercise. But by doing that, I learned how to read income statements. I learned how to read a T12, a rent roll, all that stuff. And I realized that it told a story, and then I could change the story of that income statement in the future based on what I was going to do with that building, basically. And so that prepped me. And then, with about 6 months left of college, I got involved in a direct sales company, which freaking, some people, pyramid scheme my ass. Like, you just don't put in the work. You need to put in the work. And so I put in the work and started my own business there for like a $100 investment. Over the next couple of years, that paid me like $300,000. Other people that were successful in the direct sales company blew all their money. I saved every penny. I invested it all. So I bought my first 4-unit in 2000. It was August 2013. So we're 10 years, right? 10 years and 1 month. Yeah. Like 10 years and 1 month to the day almost when I closed my first 4-unit.
So what made you, so you had looked at all these deals, right? And then what made you take action on that 4-unit deal?
By then, I'd looked at a lot of deals, and by the time I looked at it, I rolled up to the property. I kind of knew the area and knew the market. When you know the area, when you know the market, you know a deal. I know a deal right away. I know a deal right away now because of the markets that I'm playing and all that stuff, and I knew it was a deal.
Yeah.
I knew that the purchase price of we bought the first one for $190,000. The rents were, I was gonna be able to buy it at a place where it was break even, a little bit more than break even day one, but the rents were $400 a month under market. So I'm like, all right, let's go through. It needs new siding, some new landscaping, fix up the common areas, and we'll start replacing the kitchens, all that stuff. And so right away I sent out, we bought the deal. Right away I sent out, lease increases because they were month-to-month leases. 2 people renewed at like a 25% increase. 2 people left. I'm all right with people leaving, right? I had the reserves. I had, whatever. It's okay. That's 50% vacant for a month. We redid those units. We rented them for like 2x what the previous rent was. So right away, we're off and running. Funny story, though. The first night, the day that we closed, the first night, I got a call from a resident. There's water everywhere in the basement. And I'm like, God damn it, what did I do?
Punched in the mouth.
Yeah, I'm like, what did I just do? Like, so a water heater, went out or whatever, and there was just leaking water everywhere. So the first night, I'm like, what did I do? But like, it just happens, right?
Yeah, I find that the further you get into it, the bigger deals that you do, the more headaches that you get. And it's just, you look back at some of those times and you're like, well, that's just this happening again at a bigger scale.
The first thing, when I walked in here, Scott was talking about he closed 400 and whatever units, and he woke up, he's like, what the hell did I just do? So we had there was essentially that, right? But there was also a time where we bought 88 units, which was my first larger deal. It was like a $6 million deal. And we bought that one. I didn't get an inspection, like any type of like property condition assessment. I didn't look into the boilers. I didn't look into the roof. I didn't look into any of that. I just wanted to close the deal. We closed the deal, and come to find out, there's roofs that are leaking. The boilers were like shot, and we had to stick in like $6,000 a month in the winter to the boilers to keep them running. I'm like, oh my God, what did we? But the thing is that it still had cash flow. We were already increasing rents. We were able to get out a second mortgage. We luckily had a hailstorm come through that helped us with the roofs, right? So we got a little bit lucky on, never waste a good hailstorm, except you gotta be careful that now. The last like 5 years, the insurance is fucking like messing stuff up in the industry. So like last 5 years, we haven't taken any. We'll pay out of pocket a lot of our insurance because people are getting dropped left and right. People are seeing 20% increases because of what's going on in the insurance. We're only getting like I think a 10%, 12% increase this year because our deductible's high. We have a lot of reserves, and it could be a $90,000 issue, a $110,000 issue. We just pay for it and take care of it. But back then, I didn't waste the hailstorm, and we got a little lucky. Paid the deductible, got new roofs, got some new siding out of it. We ended up paying for new boilers, and that deal, we bought it for $6 million. Then I wouldn't sell it for $12 million now. Would someone actually pay $12 million today with interest rates? Probably not. But no way I'd sell it for less than $12 million today. Just a few years later, so 7 years later. But yeah, that's getting punched in the mouth is part of it.
Right off the bat, too. You gotta love it. One thing I want to do is also draw attention to Justin's Instagram handle there. He's got a lot of great stuff on there, and I like to just watch and follow along some of the just the numbers. So like your initial investment into that 4-unit, and then like how you've compounded it over time into what it is today.
Who bets on NFL or NBA sports and parlays? Anyone? Is there any bettors in here? Gamblers? There's a couple hands. I always just make the comparison. Whenever I think of somebody like betting or doing a parlay, I'm like, man, I got way better parlay than you because I put in 40 grand into that first 4-unit, bought the next one with no money in because we refinanced. We sold that deal. We bought both those 4 units for a total of, it would have been $270. Ended up selling it. We refinanced out like $100,000. Then ended up selling them for like $650. Rolled that whole thing forward into a 47 unit and into a 10 unit, right? And so that 40,000 is worth 2.5 today just off that one. But that's a parlay. In my mind, that's like the best parlay you can have, right? Way better odds than some of the parlays that are out there. So
you got to put the work in too, and stomach the risk. But you're right. There's a lot less risk there than buying an asset than doing a parlay. I get it. So now, like, take us to where you're at now. Like, now you're much more focused on building or you have an actual real business back, as opposed to being, buying that first 4-unit. You know what I mean? Like, what are you?
I did everything then.
Yeah.
So I think that's where you're going. Is like we actually have people in our business now. Yeah. So like we have on the operational side, which we have a property management company. In 2019, I ended up hiring a COO. She just last April, she became our CEO because I needed to get all my time away from the property management company. So I still control the property management company, which to me is a huge benefit because of how fast we can get it in and out and turn around these deals, the value add deals. But back then, I was doing the leasing. I was doing, some maintenance items. I was sweeping and vacuuming floors. I was doing it all. So every role in our property management company, I've done. But that also helped me along the way too, because I could call out, people's BS a little bit as well, and be like, well, no, that shouldn't take that long because I know because
you did it.
I did it. I was there, But now, flash forward. you need to get to a standpoint where like you can't look at people as an expense. You need to look at them as an investment. I mean, you're not gonna be able to do this thing alone. And I look at it and I'm like, man, I want to have like I'm trying to create employees that ultimately, are we there yet today? No, but I want to try to create multiple employees that are multimillionaires. And so it's like, how can we set that up? And that's kind of the next steps, because I know if we can do that and align the interest, number one, there's enough scale. Right? If employees have the opportunity to do that, we're doing massive things, right? But I'm also going to be able to attract the best people, right? So on the operational side, we've got about 55, 60 employees, I think there. The CEO, she runs it day to day. I show up to a board meeting every quarter, and then we also meet usually every other week, because I'm still, on the private equity side, we've got 200 investors, right? So I'm still acting as like an asset manager as well when I meet with the property management company. So we've got a lot more infrastructure now, and that infrastructure is going to continue to grow as we're going to expand our headcount on the private equity side. And like Scott said as well, I mean, I agree. Like Scott and I are very similar, I think, with a lot of our maybe beliefs, and we do things very different. Some things very different, but I think a lot of our beliefs and stuff are the same. It's like technology. I mean, on our private equity side, with 200 investors and closer to $90 million of equity under management now, we only have really 2 people on that side of the company working that side of the company because of a thing called Juniper Square, which is an investor management software. I swear to God, when I first heard the price of Juniper Square, I'm like, I'm not paying that. But Juniper Square does the work of like 4 people. So, we really try to leverage and use technologies and be ahead of that stuff as well. And but we're looking to build out our infrastructure even more here over the next year on the property management side and on the private equity side to continue to do what we do and scale and become better. I want to be the best. I know we're not even close to being the best. I want to be the best at what we do. And that takes people, and really high quality people.
So would you still say your core business is value add multifamily?
Yeah, I mean that's kind of our bread and butter. I mean, like, and what we're trying to do is just get better and better and better at that, right? So, when we first did these value add deals, some of them, I mean, I'm sure some of you guys can relate. You always hear people talking about the highlights, but a handful of these deals that we first bought, they took us forever to turn around because we didn't have the processes, we didn't have the systems. Well, May 2022, we closed on 372 units. And we bought it for 40. That the appraisal just came back for 65 million. We're going to get back like 50% of our equity. It's going to be more the debt service coverage is going to limit our loan versus the appraisal, right? But we're still going to get a 35-50% cash out refi on there. We still have another $1 million of revenue we can add to that property over the next year and a half. But we did that in 13 months. That value add, right? Which is, for that size and scale, is really fast, right? And but now we just closed 246 units at the end of July up in La Crosse. That one, our goal is between 8 to 12 months. Like, how can we? So every single deal I'm doing now, it's like, how fast can we get in and take our risk off the table by repositioning the asset as fast as possible? And again, that's another benefit of us being kind of a little bit more vertically integrated and owning the management company and controlling that, because we can put a little bit of pressure there, and I can set up a capital stack that will, that our director of facilities, our CEO, our team on that side can benefit based on this, based on the success of the project, right? So I want to get to the point where like we can flip those things around in 4 or 6 months, and people are like, well, how can you do that? Trust me, you can do it. Even if there's year-long leases and all that stuff, we can still do that. And so that's the roadmap that we're on. And as I continue to build my wealth, I mean, I've got tens of millions of dollars of equity coming from these properties when some of these trade hands or refinance, whatever. And that's going to put me in another position to change things a little bit too, to say, look, this is kind of a new way we're doing things. We're not going to pay we usually pay distributions like within the first 3 months, and then we pay them out monthly. I believe in getting monthly distributions out because that's marketing for us every single month. We're coming to their mailbox, their bank account, and saying hello, right, with a check, which is always the best, right? But we've also had to skip out on certain deals over the last 5 years because it didn't kind of fit that model. And so as we continue to grow and expand, I mean, we want to change things because I think, these rates increasing taught me a lot, right? Things can change so fast, and if we can get in and really implement our business plan even faster, we take so much risk off the table. I'll be fully transparent. So since I started in 2013, we've had 46 properties, I think. We've gone full cycle on a handful. We currently have 28 projects. 25 of them were absolutely just crushing, way ahead of projections, not even close. 2 of them, they're like right on pace. And then one of them, it's struggling a little bit because things have changed so fast, right? Now, are we going to be okay? Yeah, we're going to be okay. But it made me open my eyes like, okay, operationally, how can we reposition these faster? And so speed is really going to be the name of the game, and repositioning and taking that risk off the table going forward. And speed as well is going to allow us it's going to open up new opportunities. If I know I can go and flip a project, again, I'm not talking a single family home. I'm talking 300 units, 600 units. If we can go and flip a project in 4 to 8 months that's that big, there's not we can be a little bit more aggressive on a price perhaps and beat someone out because we can turn around that fast, right? So
that kind of gets into both of those, interest rates just shooting up as fast as they did. And I wanted to talk through your strategy now with new acquisitions, what you're looking at, how you're structuring deals, seller financing. I know you talk a lot about that.
I want cash. If it's cash flow positive day one in today's interest rates, I'm gonna buy that deal in an area that we like, in an area that we love, and if it fits that aspect, and if we can structure a deal that's cash flow positive day one with ability to add value like we can, I'm still a buyer. We've got a pipeline right now that are we going to close any more deals in 2023? I don't know for sure. But our pipeline right now is growing, and if none of these deals close in 2023, 2024 is going to be a huge year for us. And and then as we bring on more an analyst, a more business development type person over the next couple months here, our pipeline is going to be it'll be growing more and more and give us more and more opportunities. I mean, every single day from our investor list, I'm getting, hey, I got $500,000, I got 1.5, I got at any given time, last year, when we closed that 372-unit deal, we raised $11 million, raised that money in like 9 hours. Closed that deal. The next day, we locked up 460 units. So that was another $20 million I had to raise, right? While interest rates were already going up at that point, right? And so, we increased our preferred return offer a little bit. If they invested over $2 million, they got an 8%. And then other people got a 7%, I think we did on that one, or whatever. Because typically we're between 6 to 8% preferred return for our investors. And we raised, of that $20 million, we raised another $12 million in a couple days, and then the rest kind of trickled in and came in well before closing. And then ever since then, and closing these deals that we've closed this year, we've got people all the time, hey, I got money. So that's the other thing with inflation. I'm like, I think rates are going to stay higher for longer than what some people think, just because I know there's so much cash on the sideline, and I think when things are just even stable for a little while, I think that a lot of people are going to be looking to put that money to work, and you're potentially going to see inflation run again. But if we can buy cash flow positive deals today, we're all about it. New starts are down, 40-ish%, right? So when you look at new starts being down, what does that mean 2 years from now? Well, 2 years from now, those units aren't going to be coming online, right? So 2025, 2026, everything that we have in Madison, the Milwaukee area, Walworth County, Rock County, up in La Crosse, the Dells, like all those places, I think rents are going to take off in 2025 and 2026 again. And this is the problem. Like, now I've been in this for 10 years. And every time that every little phase that we've gone through, there's always been people, oh, you shouldn't buy because of X. You shouldn't be buying right now because of X. And what I've come to realize is you need to be always buying, right? If I'm a buyer and I'm not selling, what do I want prices to do? I want prices to come down, right? So you hear all this. I always think it's funny when I got CNBC on in the morning, and they're like, oh, this is a nightmare. Everything's in the red. I'm like, well, if you're a buyer, it's not. Yeah. Right? And like, if you're not looking to sell tomorrow, it's not. Now, our attitudes also changed a little bit, which I think, we really historically haven't sold many assets for what we've brought on, especially in the last 5 years. Going forward, I think that we'll end up selling 1 to 2 deals for every 3 to 6 deals that we buy. Just when we run the numbers and we look at some of that stuff, and I think creating some momentum and getting those full cycle metrics out there and stuff for bringing on new investors even and all that, I think it'll be a good thing. So I know that's a lot that I just kind of threw out there. I don't even remember what your original question was. So
I don't either.
I'm like Joe Biden up here just fucking mumbling on and on. At least maybe I'm not stuttering as much as him, but.
That's good. I did want to,
I didn't trip coming on stage either.
No. I knew you'd be able to high knees.
We did spill some water, though.
I got too amped with the water there. 2 football guys just hugging it out. So like, I mean, to get started in this business, right? I always tell simply, right? You need to be able to find deals. You need to be able to know how to manage and reposition deals, and you need to be able to either have the money or be able to raise the money and raise the capital. So you got 200 investors. You raised 70 million plus. Like, what advice would you give to somebody out there today that's like, hey, how can I find an equity partner?
Make sure that you can operate the deal. Even if you don't have your own property management, from an asset management standpoint, you need to be able to turn around the deals. Here's the thing. Even if you took away raising money, you can still double or triple your portfolio every single year if you know how to operate the deals from the equity that you can unlock from operating the deals. This doesn't have to be a sit and wait and impatiently get rich over 5 to 10 years. When you find the right deals, if you know what you're doing from an operational standpoint, you can turn those deals around in 6 months, 8 months, 12 months. You can unlock that equity. You don't even need anybody's money, right? Now, if you are trying to raise, which I'm doing both. I got deals that are going by myself, and I got deals that I'm going to continue to do both. I want to do deals by any means necessary, right? And so, and I'm to the point where like I'm getting so much money coming in that I want to put this money to work. I don't want to. I'll go and blow my cash flow on a trip or something, but as money racks up, I want to put my own money to work into these deals too. So that's the first thing. Don't think you have to raise money. I think a lot of this is about syndication maybe today, but don't think you have to. Learn how real estate's a business and how you can operate it to reposition it, because you got to be able to do that anyways. If you can't operate or have no idea, right, how to hold the operation team accountable from an asset, because even if you're not operating, you're still the asset manager if you're putting people's money to work. And if it's not actually you doing the asset management, then that means you've hired someone, you have the infrastructure who can. Now, when it comes to like getting your first investors and stuff like that, I mean, my first investors were close family and friends, right? I had 40, they had 40, right? And it just went from there. And then, then word spread, right? And I'm a big believer in you need to get in the rooms. Why did I pay the $90,000? Because I wanted to get in the room for $90,000 for 4 days. It was worth it, trust me. It was worth it. You need to get in the rooms. You need to share your story. What have you done? What are you doing? What are you going to do? And then ask a question, and then you be responsible for the follow-up. No one should remember you no matter what, because you're not that special. I'm not that special. No one's going to remember me. I don't have any business cards on me ever, because I'm not handing them out. And maybe that's bad. Maybe I should be. But I know if the follow-up is in my court, I'm going to do my job, because I'm going to call you even if you report me to the do not call people. Even if you hang up on me and say, take me off your list, all right, I'll take you off my list. I got another list right over here for you. Excel spreadsheet number 2. Juniper Square database number 2, right? And maybe I just won't contact them for 4 months. And I've done that over and over again, and I give them a break. I call back and I kind of make a joke. I'm like a dog with a bone, Rick. And they kind of laugh a little bit. And now I start building a relationship, right? Whether it's buying a property or an investor or whatever. So when someone's on my list, I never take them off. But share your story and get their contact information, because they're not gonna follow up with you. You're not that important. They'd rather watch the Packers get their butt kicked on Thursday Night Football than call you, right? I'm a Packer fan, so that hurt last night. Damn. But be in control of the follow-up. Be in control of the follow-up, because that will pay you millions and millions of dollars if you can follow up.
Okay, so 2 things that I want to cover. But one, this winning wealth thing that we're doing is it's not just about real estate syndication. That's just one avenue, right? It's about building wealth. Wealth, health, and happiness is kind of the whole mantra. But syndication is one avenue to that. But and that goes into kind of my next question. Justin's obviously a quintessential.
And I'm all about syndication. I'm all about it.
Yeah.
But there's more than one way to do it.
For sure. And so some of the other ways you're doing it, you're a quintessential entrepreneur. I think you started a painting company to kind of integrate into your business.
It failed. Because what I should have done is because I just closed it down. I'm like, this is not, I closed a $30 million deal, and then something came across my desk about someone complaining about a $4,000 paint job. Dude, we'll fix your paint job. You don't even have to pay us, whatever. But I just couldn't do it anymore. So what I should have done, instead of starting it up, I should have found a painting company that was already doing $5 to $10 million a year and bought that. Right? That's what I should have done looking back for where I was already at in my career. Right now, if I was just starting real estate, it probably would have been fine. But and we probably would have figured it out. But I'm like, this is doing it was doing $1.2 million a year. Someone's like, you gonna sell it? I'm like, no, I'm gonna close it down. It's not worth anything, because me as an owner still was in it every single day. If I'm in it every single day as an owner, it's not worth it. Who's paying for that? I mean, it wouldn't have been worth my time.
Yep.
Shut it down. So punch in the face, right? But I learned something. What I learned, well, I just told you. I at that point in time in my career, this was in 2020, I should have just freaking found a $5 million, $10 million a year painting company, because then at that point I would have had the resources, aka money, to pay someone really well to be on the front lines, to oversee the projects, to lead the team.
And buying businesses is a great way to accelerate your way to wealth too, right? I think. Did your wife buy a business or start one recently, a dental?
Yeah, she's a dentist, and so she was an associate for 10 years, and she opened up a practice a year ago, and she's working on getting the second one going right now.
Boom.
And there's a third one that she might buy. So my dad is a veterinarian by trade, and they had 3 clinics, and I bought into that with some of that direct sales money back in 2012. Bought another location. We bought a third location. Bought some of the real estate that went with it. 2016, we merged with 16 other clinics across the country. I was able to put in more money at that time. I helped with acquisitions and kind of just did whatever needed to be done. I was the youngest dude in the room. I was 27 at the time, so I learned a lot. I kept my mouth shut a lot, and I just did what I was told and, hustled and, whatever. And so I got some upside in that company. It sold to a subsidiary at KKR in late 2020.
That's a big dog, by
and
the
it was
way.
my investment like 12x. And by the way, I still have, like 5x my initial investment rolled forward in that deal because we sold and got some cash and got some stock. So that's going to sell over the next couple of years. So yeah, I mean, it's I agree with what you just said right there. I mean, there's a million ways to play the business game, and it doesn't just have to be one thing. But you also shouldn't get spread so thin where it's like you got so much going on and you can't focus to really drive home and build something like that's substantial, right? And then once you've built something substantial, now you can look at doing more things. So I try to keep it pretty narrow. I mean, and I don't do anything like, going forward right now, obviously with KKR buying that company and everything, I don't do anything there day to day, right? So it's just an investment rolling forward. So today, it's the real estate. And it's I have a mastermind that's coming up the end of November, 3-day mastermind in Madison. So I do some coaching. I love to see other people succeed. I mean, why do I want some of our employees to be millionaires? And my content creator who's here today, he's like, man, the next six years, you think I can be a millionaire? I'm 20. He just turned 24. By the time I'm 30, I'm like, yeah. He's like, you don't think it's unreasonable? I'm like, yeah, it's unreasonable because I'm an unreasonable person. And anyone that's successful is unreasonable. The CEO of my management company, we go at it sometimes, like that. She's like, you're being unreasonable right now. I said, good, because average people are reasonable. I don't want to, I need to be unreasonable. I need to be more unreasonable to be successful, right? I can't be reasonable. People just waking up in the morning, rolling over, and all they can barely do in the day is put their pants on. They're reasonable people. I'm not going to be reasonable ever. And then I go to my CEO and I tell her, look, you're calling me unreasonable. The reason you're in that spot, CJ, is because you're unreasonable too. Being unreasonable is a good thing. So I told Danny, I'm like, no, it's not reasonable. It's unreasonable. But that's why, that's what you have to be if you actually want to go and be a millionaire by the time you're 30. You got to do unreasonable things and be called unreasonable.
Absolutely. I love that. I'm getting fired up just talking about it. So what would you say, how do you decide, when you're planning out your goals, right? How do you, and you have your core focus on buying value add multifamily. What do you, when you're are you gonna go buy more companies, or are you just gonna continue to buy and add fuel into the real estate business?
Yeah, I mean the real estate business.
From a goal setting perspective, where do you see yourself in 10 years?
50,000 units. I just threw that out there a long time ago. It's just a number, but it's also something that keeps me going, right? Let's keep going. Let's keep going. Do I care if I get 50,000 units ever? I mean, I don't know, right?
Yeah.
But I remember when I bought the first 4 unit, right before I closed, which by the way, a lot of people told me not to buy because we were just coming out of the Great Recession, right? I'm like, damn, I should have bought more. Like Scott said, there's no more $9,000 a unit deals that you can pick up today. The one gal said to me, well, what's your goal with real estate? You're buying this 4 unit. I said, I want to own 50,000 units one day. That was the first time I ever said it, thought of it. I just thought of it in that moment. I just responded that. I couldn't even really believe it when I said it. And she kind of just smiled oh, that's cute. And then, 5 years later when we're at a few hundred units, she's like, oh, you weren't kidding. I'm like, no, we're going, So my main thing is, I always want my potential to be going up, right? But potential is something that I haven't realized yet. So then simultaneously what I want to be doing is closing that gap between the potential. And then as I close the gap, I want the potential to expand more. I don't believe in the federal government, right? And so I believe in making an impact in my community, and that if everyone made an impact in your community, the world would just be a better place. You wouldn't need a federal government. So I want to be able to make a huge, significant impact on my community and in the communities that we do business in. So that's on the list. But to me, it's the biggest thing is every single area of life: health, wellness, health and wellness, business, spiritually, relationship, family. It's never going to be completely balanced. And there's going to be certain times when one area gets more attention than the other. But I'm most unfulfilled, and I feel the shittiest when I'm not closing the gap on my potential in those areas, right? And so that's the main thing. And I know if I keep doing that, then the goals that the things I really want to be able to do, what I want to do. My ultimate goal is to be able to do what I want, when I want, with who I want to do it, right? And I don't have the resources yet to truly do that. To be like, okay, screw it. Like, I want to fly on a private jet every single day to go golf all the top 50 golf courses, whatever it might be, right? Which my handicap's not as good as Brock's. My handicap's probably still like 17. But that's what I want to be able to do, right? And support, be able to support things in the community. So I know that's not a direct answer, and some people are like, oh, it doesn't sound like you know where you're going. I disagree, because I know that in every single area of my life, I want to close the gap between where I'm at and my potential. That's what I want to be able to do every single day. And it's not like a number. Like, that's the thing with the 50,000 units. Like, the number, if I did get that, I think I'd wake up and I'd be like, okay, cool. No specific number is going to actually make me feel full. That's what I believe, right? Because I kind of played that game for a while. And I thought, like, oh, I want to get to 1,000 units. I want to get... And it's like, it's not the actual number, but it's the whole process, and it's the whole thing of just leveling up and getting better and better every single day that excites me and keeps me full.
It'll be 100,000 units after that. I get it.
Yeah.
All right, so I think we've got through a lot here. Let's do a little Q&A. I don't know if I should run out there. Who's got questions for Justin? I'm not going to be able to see shit. Come on. Oh, man. All right. I'm going to try not to eat it on that one, too. Or shout it. Yeah, there's not that many people.
Thanks, Justin, for all this. This is really cool. Kurt Gow's always an investor. When is your Madison events mastermind thing you mentioned? And I was interested in that. How could I find out more about that?
Yeah, the marketing, I think, will be out like next week for it. But it's downtown Madison. Starts the evening of November 30th around 5 p.m., which is networking, drinks, stuff like that, with everyone that's going to be there. It'll be a maximum of 30, so it's a pretty intimate group. And then all day Friday, and then it's done Saturday, December 2nd around noon to 1 o'clock. There's executive tickets, VIP tickets. The VIP gets dinner with me on Thursday night, and again, that's going to be kept at a maximum of 5. So, I have a blast doing them because it's such an intimate environment. The people that have been there, I think we got a couple people here in the room today actually that have been to my events. I have a blast, and everyone has have had great success on the back end of those. So the one way that you could get a hold of me is through the Instagram handle. Shoot me a DM. My email is justin@spauldinggroup.com. Or, like I just said at the beginning, if you have a business card or what I'd like to do after is get your contact information, and we'll follow up with you and get you all the information that you need for it. What'd you say your name was again? Kurt. Nice to meet you, man.
Love it. Who else? B-Rock. Let's hear it.
So someone that's decided they want to get into syndication, right? The first thing they're thinking is, where am I going to get the money from? To someone in the room that doesn't necessarily have a big network, they don't have friends and family with a ton of money, where do you suggest they start, right, to go out and start that process?
There's so much money in this world, which it's hard to believe it when you are just starting, but it's the people. You can't prejudge, by the way. Like I guarantee you guys have people in your circle that have money. You just don't know it because you've never actually told them your story and asked for it. So I mean, if you go through your phone and I guarantee we all have over 500, 1,000 contacts on our phone. You go through our phone, if you make everyone aware of what you're doing, I guarantee you'll find somebody that has 20, 50, 70 to help you get started. So I don't believe that people don't have. I just don't believe it. If you got a phone, you got contacts, and if you got an Instagram account, you got contacts there. If you got, then the next thing is getting to events like this. I mean, at my masterminds in my accelerator group, we got people talking back. Like some of the people that invest in my deals as LPs are at those events. They're looking for deals to invest in. Business after fives, right? Your local businesses, wherever you live, those business owners are great because they have excess cash flow at the end of the year, and they want their cash to work for them, right? And they don't understand. There's a lot of people that do really well that don't understand real estate investing at all. I have a family that their business starts off like $10 million a year. They're like scared shitless to actually go do real estate because they're so focused on their business, number one, but they just don't understand it at all. So they write us a check. The only way that I got that business, because they're in my hometown. I just walked into the business one day. That's how the relationship started. Yeah, I mean,
I love it.
So showing up. I mean, showing up and to those types of events, and again, sharing your story, and then getting people's contact information. And even if people don't invest with you right away, that's fine, because you only need 1 or 2 or 3 people to say yes to you to get your first deal. And when you get your first deal, guess what? Now your story just changed. Because what you did is now like what you were going to do, right? Like previously what you were going to do now becomes what you did. So you need to be able to update. So if you can go to these events and get their contact information so it goes into your database, you can send them hey, we just closed on this deal and here's how we turned it around, right? I mean, we do that all the time. We'll send updates like that. So, and that keeps a pulse point on, right? That now that they potentially, some of those people will reach out to you and be like, hey, when's your next investment opportunity? It looks like that one went great. And then simultaneously, while you're doing that investment, like you gotta get out and again pound the pavement and be able to get more contacts in that database. And as your story changes, you need to, like my story never stays stagnant when I'm telling people my story, right? Because again, what I'm doing today becomes what I did. Right? And yesterday when I was telling you my story of where I'm going, today I'm doing that. So I need a new where I'm going, right? Just like we kind of talked about. And then I need to be able to have the balls to just ask a question. And again, you get to a point where like you realize it's just easy to ask for money. Because some of the people that don't really understand real estate, when we send them a check back when we refinance something, they're like, I don't want my money back. What do you mean? Right? Because they want to keep getting the cash flow. They want to keep getting the appreciation. Like, what do you mean you're returning my capital? Did I do something wrong? Did I piss you off? Some people say that. I'm sure Scott's had a lot of that. You guys maybe have had that. So there's a lot of money out there, and you just got to be able to ask for it. And you got to be able to get in the rooms. You got to be able to get in front of people. You got to be able to put yourself out there, and you got to put yourself in control of the follow-up 100% of the time. It's very unlikely anyone else is going to remember you tomorrow without you following up.
Such a great nugget about follow-up. Another question. My man, Nick Keys.
Justin, you talked about the last 5 years, you've only gone full cycle on 1 or maybe 2 deals. Can you talk a little bit why your mindset's changing or why the strategy's maybe changing that you want to...
Because, if there's more to your question, you can just keep going after that, but I'll answer it pretty quick. So the deal that we bought in May of 2022, I mean, when that deal goes full cycle, if it does what we think it's going to do and continues on the trajectory, I mean, just based on already with the $40 million purchase and a $65 million appraisal right now, and us getting that much capital back already, even with interest rates doubling, more than doubling, I've basically got, when that thing sells, I'll have $20 million that comes to me from one deal, right? So for some of these, I want them to go full cycle to then, again, position myself to have more options with what we're doing for acquisitions as we get faster and faster operationally to turn deals around. Because again, if I don't have investors that don't want to invest because they're not going to get cash flow for the first year, then I'll be like, well, okay, I'll go do this deal myself. Whether it's $20 million, $100 million I need, I can just go write the check myself. Now, what's going to happen if I'm in the situation where I can write a $20 million, $100 million check by myself for the equity to go do that deal? What's going to happen? So many other people are going to want in that deal because no matter what the terms are, because I've got so much of my own skin in the game. Right? So that's kind of the thesis and the mindset of why. And it'll just open more and more doors for more and more family office capital and all that stuff as we get more and more of a track record on these larger assets going completely full cycle. So since we started, we've had 11 or 12 deals go full cycle. Over the last couple of years, it's only because we just haven't been sellers lately. You know, I mean, you look at all the appreciation, and you look at even like right now is not the best time to sell. We sold a little 10 unit. We have one other deal that we'll probably list here soon, but like we're not really looking to sell much. We're still looking to buy more. But again, as we keep kind of buying more in 2024, 2025, there will be certain assets that we'll sell, let them go full cycle, realize the promote and the carried interest that we get to go deploy that capital, and you know, then the net worth, then my personal net worth. I mean, it's already a hockey stick over the last 10 years, but I mean, it'll continue to hockey stick at a crazy trajectory. Does that answer that question? Was there more to the question? Because I kind of cut you off.
In the front here.
I'm rude like that. I cut people off sometimes, especially when I'm driving.
I'd love some more information on what caused you to make the decision between holding and selling.
So, does anyone know what loss to lease is? Okay, so loss to lease is something that I really pay attention to, right? So a loss to lease is basically if Rick is staying in an apartment and if his lease is at $800 a month, but we know if it went vacant, it could be rented at $1,000. That's $200 a month loss to lease. If he's got 12 months on that lease yet, it's 200 times 12, $2,400 loss to lease, right? So the deal that we just I was just talking about, we bought for $40 million that appraised for 65. We still have a loss to lease in that deal of just under $1 million a year. So over the next year to 2 years, like we will keep pushing that. And when that loss to lease gets closer and closer to zero, I've really squeezed out all the appreciation that I can force. And now it's gonna increase in value more just with like the macro and microeconomic environment, right? And so my capital, I want to hit doubles, triples, quadruples with my capital in 2 years, 3 years, 4 years, right? So once I reach that point, it's not growing as fast. The velocity slowed down, and so we're looking to redeploy the capital at that point. So like the 10 unit that we sold, that was the story there. We were just waiting at that point, and it's like it just made sense to sell it. Now, will we also get to the point where we'll just refi some of these deals as well? Yeah, absolutely, and hold hold longer and all that stuff. But again, if we took the equity and let's say we raised $10 million and we push the rents in 3 years to and there's no more loss to lease, we can't force any more appreciation, and we could take out that equity and it's $35 million of equity, I want to go rinse and repeat and find another deal that I can now take that 35, double, triple, quadruple it again in the next 2 to 5 years, right? So that's really what I'm trying to do. Now, as my personal net worth increases, I'm going to get to a point where I'll have so much capital I won't know what to do with it. I'll probably have my own portfolio that I'll never sell anything. I'll hold it forever, and let my family roll with it after I'm gone and stuff like that, right? But with where I'm at now and with where I want to go and the jumps that I want to make, that's kind of, so I don't know how long we'll look at selling one for every 3 or 4 that we buy, but it'll be for the next maybe 2, 3, 4 years, whatever, until it kind of makes sense to maybe not do that anymore, right? I can always change my mind. I could change my mind tomorrow. Brock has me back tomorrow. If we're having this event again in a week, I could change my mind in a week, right? I'm also not scared to admit that I was wrong on something and then pivot. Because I actually think I'm wrong quite a bit. I'm not perfect. I'm not right all the time, and I can admit it. But I'm also not scared to admit that and then take different action right away and pivot immediately.
Huge. Any other questions out there for the man? In the back here.
Awesome question, Justin. Thanks again. Jared Johnson. I'm just curious, so as a new investor, you keep saying, share your story, your experience. So as a new investor, what advice or what would you encourage them to build that confidence or build that credibility?
So is that you're asking for yourself, I'm assuming?
No. I'm just saying, I have some experience. I'm just saying, I just like to hear from somebody who has a lot of experience, what advice you give to help build more credibility, especially for new investors.
If you're a brand new investor and you have your story's your story, right? So you can't make something up, right? So if you're so brand new that this is the first event you've ever been to, well, what you did is you came to this event and maybe you read a couple books. Right? Now, what are you doing with what you just learned? Hey, and I'm out and I'm looking at duplexes, right? And then when you find a deal, and then you say, hey, and then when I find a deal that's going to double or triple our money in 2 to 3 years, we're going to pull the trigger and we're going to do that deal. Is that something you'd be interested in investing in, right? That's a simple. Does that make sense? Does that make sense or not? Who in here has not done a real estate deal yet? Okay. You want to come up here quick?
I like it. Hell yeah.
All right, and what's your name? Nick. All right, Nick. So if I'm trying to answer his question by an example, right? The first part of sharing your story is what you have done. So what have you done? And it doesn't need to be perfect right now because we're not trying to just like, so this is something we do with the mastermind. This is something we do with our coaching. I get people's stories right, and we'll have people come up on stage, and we'll literally start this way, and then I'll narrow it down for them so they leave with a package story. So don't worry about what you say or how long or how short it is, but what have you done?
Mainly right now, I'm just reading and trying to grow my overall knowledge.
Great. That's where he's at right now. You don't have to lie about it. You don't have to lie about it. You got to remember, you got to remember that you're not trying to necessarily close every single person that you talk to today. This is a long game. You want to be genuine with the people. You want to tell people where you're at. But now you got to tell people what you're doing. All right? So that's what you did. What are you doing? So what are you doing?
I'm working with Andy over there, trying to start more possible investments.
Is Andy your partner, a broker, or what's Andy?
He's a mentor.
Mentor, okay.
Yep.
So that's also like what you did / what you're doing, right?
Yep.
I've got a mentor that has X amount of doors. We're currently looking for, what are you looking for? What are you going to do?
He's trying to convince me to get into a single family
Okay.
right now. I'm kind of wanting to go a little bit bigger. But
Okay.
he's telling me to start a little smaller.
So either way, when you figure that what I would recommend is whether you need to make a decision.
Yeah.
Right? Is it going to be single family? I recommend however the hell you can get your foot in the door to start. Right?
Yeah.
I'm always a proponent of bigger is better, right? And an FHA loan and all that stuff is good for single family, duplex, 4-unit, whatever. So I'm not going to get in the middle of what the size should be.
Yeah.
You need to make that decision, and you should make that decision today so that you can, and it could be, hey, I'm looking for anything from a single family to a 4-unit, right? And we're going to close on, we're going to find a deal that 2X's to 4X's investor equity between the next 2 to 5 years. Is that something that, when we find that deal, is that something that you'd possibly be interested in, Mr. and Mrs. Investor? And then you get there, what do you do then at that point? Were you paying attention to what I was saying?
I was paying attention, but
At that point, I could care less if you give them your business card. At that point, you get the business card from them, so that you can follow up, and you put their name in your Excel spreadsheet so that you're in control of the follow-up. So that when your story changes, because they're probably not going to invest in your first deal. You might have to go share your story with 200, 300 people. That's fine, because now, guess what? After you do find the 1 or 2 people for that first deal, you now have 200 or 300 potential investors for the next deal that you do, that are watching that are going to be watching, because you're going to be following up with them, letting them know that your track record's changing, your story's changing. Because a year from now, hopefully, or 6 months, or whatever it might be, at that point, what you did, do you know what your did is going to be? Yes, you're going to be improved, but the what I did part of my story is going to be, we closed on a 3-unit apartment building. We took the value from it was a $150,000 purchase price. It's now worth $230,000, right? And now I'm out looking for an 8-unit because we got that property listed to sell to unlock the equity. We're looking for 200 investors. We're going to go buy an 8 to a 16-unit. That's going to double, triple, or quadruple our money in the next 2 to 6 years. Mr. and Mr. Investors, is that something that you'd be interested in?
and just keep building off.
And then you just keep building off that. So does that make sense right there, how to do your story? That's it. It's not that, like, you don't lie, don't make something up that's not true. Like, you got to start where you're at, man. You're in your 2 feet. You're in your shoes. Just start where you're at. That was good.
Thank you.
Let's give it up. We can keep it going all day. Let's go.
I'm good. What time we got? Brock?
Noon.
It's up to you, Brock. Cut it? Brock says cut it.
Let's give a big round of applause for the man himself. I think the world of you.